I'm John Batchelor. Mary Kissel of the Wall Street Journal is here with me. A stroll down memory lane. The president goes to the Midwest. The president goes to the Midwest for a worthy occasion. An occasion near the Ohio River Valley. Mary, I understand the President of the United States traveled to the Midwest today. Is that accurate?
That's right. Happy birthday, Mr. President.
Happy birthday, Mr. President. Now, this president was going to the Midwest to be celebrated by his hometown, well, adopted hometown companions, and also to raise money for his re-election campaign.
That's right. It was a big ticket dinner.
I take you to another president of the United States traveling to the Midwest for a celebration of the completion of the Ohio River Improvement Project, October 23rd, 1929. That president was Herbert Hoover. And while the president was in Louisville and the environs, there was a violent storm in the Ohio River. It threw up a lot of damage to the river coast and also to the Cincinnati and Louisville waterfronts. It was much remarked upon in the papers, although you didn't get to read it much because of the headlines that appeared the next morning, Black Thursday and the crash of the markets. And this is the entry for David Weidner of the Wall Street Journal and Market Watch, who writes Writing on the Wall, because today Mr. Weidner, with his colleagues Simon Constable and Paul Vigna, were right there at WSJ.com at 4 o'clock announcing the crash of the markets. We blame you, Weidner. You were the messenger. Herbert Hoover was in Louisville. There was no David Weidner on WSJ.com on the internet at the time. But if you'd been there, we'd still be blaming you, David. It's your fault. Good evening, David.
Good evening, John. Hello, Mary.
Hello.
Mary wrote a Twitter earlier today in which she said the Obama market. Is it the Obama market the way that it was the Hoover market in 1929, Mr. Weidner?
Well, Bush left office 3 years ago. I think it's pretty hard to blame it on him at this point. But
he agrees with me.
Nobody wants ownership of this market right now, I'll tell you that.
Which is why we're blaming you.
Yeah.
All right. Your rationalizations today were legion. We pointed to Europe. We pointed to Asia. Have you noticed the Asian numbers, David? Are you looking at your screen?
Yes, I have.
They used to call this a war in Korea when it happened like this 50 years ago. There is bleeding going on. I mean, they're ready to surrender to the North. This is a massacre, David.
The latest I'm seeing is Japan is down 4%.
This is their last trading session of the week. They've got to get out.
Going around the globe like a bad cold. It could be a little more serious than that. But you look, John. We want to put blame at something, and sometimes we try to put too fine a point on it. We talk about all these different, factors. Is it this? Is that? I think what's really happening here is, we've been talking all summer that the market just did not seem to reflect this data that we were getting. The economy is just limping along. It's dragging. It's getting closer and closer to the ground, and yet the market continued its run. I think all of a sudden, now that we got this debt thing out of the way, everybody's just sitting and realizing things are not so rosy. And I think it kind of has really hit this week, and especially today.
And Dave, the follow-on question to that, of course, is why are things limping along? And here I present a theory to you. In Europe and in the United States, where we've seen markets limp the most, we've had the greatest amount of government spending, not just over a period of years, but over a period of decades. Are markets finally waking up to the idea that this kind of welfare spending model simply is not sustainable? And if that's true, then there's no easy, quick fix for that. Are we going to be in for some real difficulty here, not just in the days, but the weeks and the months to come?
Well, I think that to say that the model of spending, to go that far and say that doesn't work, I'm not sure I'll go that far, but I'll come very, very close, and I will say the spending that we've done, the confidence in the people who have been doing the spending, or the finance ministers in Europe and our own government here, people, especially in the markets and on Wall Street, investors have lost complete confidence, and I think that's one thing that the debt debate and this basic disaster, basically that we've had over the last few weeks, has just really solidified, I think, in people's minds that these guys don't know what they're doing, and really it is just a free-for-all out there because the Fed doesn't have a handle on it, central banks don't have a handle on it, certainly Congress and the president don't have a handle on it, and we're just out here fending for ourselves. And the government, this time, if we are to go into a recession, has absolutely zero power. It has no more bullets left in its gun to go in and do anything to try to lift employment, spending. Basically, it's just going to be a long, tough slog if we happen to fall that far.
David Weidner, writing Market Watch, writing on the wall, and also in the Wall Street Journal, often on WSJ.com, where we get to blame the messenger. That's the joy of the Internet. Mary Kissel of the Wall Street Journal editorial page. It's an Obama market. Mary, someday again, I will have the dream where I go up to the top of the riverboat and I find that there's no one on the bridge and someone's screaming, Mark Twain, Mark Twain. We're going to crash and no one's going to save us. Thank you, Mary.
Thank you, John.
I'm John Batchelor.